So the GDP came out US dollar bearish. Okay, ECI, the employer's cost index, came out USD bearish, which was gold bullish. Remember what happened on gold? Gold pushing new high. We bought a pullback. It went nowhere. Then I did the same thing on crude. Crude pushed new lows, sold a retracement, and then it was off to the races, the downside. So we made nothing on gold today. Took one swing, got a +5, -5 on it for a scratch. Made all of our money today here on crude. Now let's grab a look here, and let me show you guys what the crude market looked like and give you guys some of the heads up on the clues we got today. Now first of all, I know, we've had this bull channel here for what? About a month now. So there's no questions about that. We had that big old bull channel. Now what does a bull channel tell me to do? A bull channel tells me that if we end up falling out of this bull channel, I'm going to buy at support. A bull channel says buy at the lows of the channel, and if we break the lows of the channel like we did this morning, you want to be buying at support below that channel. Okay, so that was the first clue, got the bull channel. But then we looked a little bit closer, and when we looked a little bit closer, we realized we had a more recent price channel. Now mark up your high here, mark up your high here, and you can connect the dots, and that is a trend line. Copy that trend line down here, and that becomes a bear channel. So we have a massive bull channel, as you can see. We recently broke out of the bull channel, and then here we are now in a new bear channel coming down. Clue number 2. So the most recent channel was a bear channel. What does a bear channel tell me to do? With new lower lows, sell retracements. If price rises back up, sell at resistance. Clue number 3. Mark up your low there, mark up your low here. What is that? Well, that's a trend line. Well, then do the same thing up top. Mark up your high here, mark up your high here, and what's that? That's a trend line. What do we call that, folks? That is a wedge, right? Or a triangle. Okay, so we got a wedge pattern here now. So that was our third clue. And then here we are now, sitting here. Where are we? Right at the lows of that channel, right at the BMT on my 89 range chart, which means this is a sloppy and choppy area where we began our day today. Now what happened this morning was we anticipated GDP to be dollar bearish. Now in anticipation of that, we really can't predict this, but we can sure get ready for it. So we anticipated we're going to see some more bearish news in the dollar today out of the GDP, and we got exactly that. Now right now, that negative correlation, the dollar and crude, is not working right now. Why not? Because right now, the age-old story where if the dollar drops, things become more expensive, therefore prices should rise, that's not applying right now. And we've seen this for a couple of weeks now, and the reason why it's not applying is because the global marketplace right now sees the US dollar dropping as being a sign of decreasing demand on crude. That means while the dollar is dropping right now, we know we're closing factories, we're losing jobs, and people aren't taking those summer trips, they aren't shipping products around the world, they aren't manufacturing new widgets, and so they know that as the dollar drops, demand on crude will drop as well. So right now, we have a positive correlation of the dollar index and crude oil. Very important. So we knew we were probably going to get price to drop. And the big thing here was we really didn't have any options to the upside. Now look at this chart here. This is one of the things we talked about today. We said, guys, think about this. If the news comes out crude bullish and crude jumps up, really the only thing we can do here would be to wait till we get above 99.50, right, and then buy pullbacks there. We have all this chop and slop in here. So we really knew if price rises on crude, we've got some time to plan our attack. Unless price went right to 100, which it probably wouldn't do. So we knew going higher here was going to be a challenge. Well, that made it very easy for us because now, knowing that if price was to fall, again, we have that bear channel, we were ready for, what was it again? Selling retracements, and if price rises back up, I'm now going to sell it again. So again, the previous low of day is right here, which means when we get below the previous lows, we now go into an outside day. 8:30 news comes out and crude drops. Now at this point in the morning, we're waiting a little bit, 8:30, 8:35, right, 8:40, and by 8:40 we finally get an idea of where we're going here. New lower low, wave 1, new lower low, wave 2, I take the wave 2, and it gives me nothing at all. So at 8:49, I take my first wave pattern I can get my hands on, It goes down +5, comes back up -5, and I go, oh no, this sloppy price action right here. And I said, all right, guys, all right. We know the news is behind us. We know it's crude bearish. I know the price action stinks right now because at that point in the morning, we did not have much confidence, not moving very consistently at all. And my exact words were, just like I said earlier on this week when we had the first couple trades the day were sloppy. I said, guys and gals, we're going to stick to our plan, and eventually this +5, -5 will be a +5, +10, +30. And once again, we didn't have to wait that long. Price comes down, makes a new lower low. I'm going to sell a retracement, comes all the way down. I make 39 ticks here at 902. Now, where did I take profit? I take my profit off at that 95.70. Remember that wedge? That was the wedge. Well, of course, once I take my profit there, we quickly see that crude is not slowing down. It goes right through that major support.